Good morning, everyone. On behalf of Systematics Group, we welcome you to the 4Q FY25 earnings conference call of NALCO Limited. We are joined today by Shri Bijendra Pratap Singh, Chairman cum Managing Director and Director Finance, and other functional directors of the company, along with Mr. Bharat Sahu, Company Secretary, to discuss the company's financial and operational performance for 4Q FY25 and full year FY25. I would like to thank the management for giving us an opportunity to host this call. At the end of the presentation, we will open the floor for questions and participants can raise their hands if they wish to ask a question. Now I request Mr. Bharat Sahu for his opening remarks and introduction of the management team. Over to you, sir.
Yeah, good morning, Shweta, and good morning all our esteemed shareholders, analysts, and all the participants in this conference. So it's a good morning after a great evening. In fact, NALCO posted a very good result, a stupendous result last evening, and I am sure all our esteemed shareholders must have gone through the results. In my opening remark, before we formally start, let me start in a different way. All must be knowing Sergei Bubka, the pole vaulter from Russia, had once said, I make records and I also break records. Perhaps NALCO is also following the same path. NALCO is creating records and also breaking its own records. And the last result, yesterday's result, that is the financial year 24-25 result, is a testimony of that one. So with this back note, I don't want to take more time. Let me first introduce all our management and the functional directors attending this conference call. Extreme left is Sri Simant Panda, our EPO ED Finance. Sitting next to him is Dr. Tapas Kumar Patnaik, our Director HR. And next to him is Sri Sadashiv Samantray, Director Commercial. Sitting in the center is our CMD and Director Finance Additional Charge, Sri Bijendra Pratap Singh sir. And to my right, it is Sri Pankaj Kumar Sharma, Director Production. And next to him is Sri Jagdish Arora, Director Projects and Technical. Before we start taking questions from our esteemed shareholders, we would like to have a brief presentation. And I would request my colleague, Mr. Subha Purohit, to kindly make a brief presentation. And then we'll start taking questions from the participant side. Thank you.
Thank you, sir. I am Subha Purohit from NALCO. So I'll be starting the presentation. Good morning to all. This has been a historic quarter and a historic year for the company's history. So it's my privilege to present the results for the Q4 and the full complete year.
Sir, the voice is not audible, or can you please come closer to the mic?
Now it's okay.
Okay. Now it's audible?
Yes, it's better, sir.
Okay. So I am starting again. So it has been a historic quarter and a historic year for the company. The company has recorded its highest ever financial performance, be it the revenue, the PAT, the margins. I am starting the presentation with this background, and this is a standard disclaimer. The agenda will consist a brief on the company, its operations. Then I will go through the financials and a bit on the industry outlook. So when you see our company, it's one of the most integrated bauxite, alumina, and aluminum power core complex. It's integrated, its raw material are secured, and we are also one of the lowest cost producer of bauxite and alumina in the world. As per our capacity, all capacities are given here. Bauxite mines, we are having 2 operating leases. The Panchpatmali is Central and North Plug and South Plug. Then our alumina refinery capacities, smelter capacities, we are integrated with our captive power. Recently, we have started our coal production from our coal mines, and it is happy to note that in the year, this concluding year, we have got licenses for the combined Utkal D and coal mines with a capacity of 4 million tons. Then also we are having our dedicated port facility, and we are having 198 megawatt 4 wind power plants we are having at different locations of the country. In Rajasthan, 2 wind powers are there, in Andhra Pradesh 1 and in 1 Maharashtra. Coming to the financial performance of the quarter, all figures are given here.
Physical.
As far as the highlights are concerned, we have achieved highest ever domestic metal sales in this year, in the quarter as well. And for productions, we have achieved highest ever thermal power production in this year. And all our productions, in all our production units, we are operating at almost 100% capacity utilization. The financial results are published, and it is very well highlighted. I think everybody will discuss at the end of the presentation about our financial performance. So we have achieved the highest ever revenue, highest ever profit, highest ever margin for the year and for the quarter. So again, to reiterate, we have achieved the highest ever revenue, highest ever PAT, highest ever margin, and also the highest ever dividend in the history of the company. Coming to the LME price trend, this has been a very volatile period since the end of the financial year. After the announcement of the tariff structure by the US government, it has been very volatile. Earlier, the LME price were at about 2600 range, but since the announcement in April, it has reduced to 2300 levels. But again, now the 90 days pause has been announced by US tariff to all countries, and recently it has been announced for China as well. The trade negotiations are going on. So right now the price has recovered from the bottom, and it has been currently settled at about $2,450 per ton. So still the market is unsure and uncertain. They are looking to the upcoming developments on the negotiations, and which will change the market in the future. There are some other cases also, like smelters it restarts. The US Fed interest rate in pause mode right now, as they are thinking about the rise in inflation concern. Then there are corrections in alumina prices as well. So these are all setting the aluminum market right now. Coming to the global industry outlook, the global GDP growth, which the IMF has predicted in the earlier January 2025 outlook. From since then, the outlook has been a bit slightly reduced, and the reduction is only because of the tariff-related developments. So the global economy is projected to grow at about 2.8% in 25 and 3% in 2026. As far as aluminium sector is concerned, the aluminium sector is projected to grow at about 1.5% from 24-25 to 25-26, and the market is likely to stay in a slightly deficit trend. Like when you say in 24-25, the deficit was about 1 million tons. In 25-26, it is projected to at about 0.7 million tons. The alumina market, the supply side concerns have eased in recent times. There are production announcements in Australia and other areas. So in the alumina sector, likely the projections is likely to be at a little bit on the surplus side, which will determine the prices of both alumina and alumina. Coming to the Indian economic scene, India is still the fastest growing economy in the world. The projections of IMF, RBI, everywhere it is, the country is likely to grow at about 6.5%, 7% in the next year. The aluminium sector is progressing very well. The aluminium demand is rising at a CAGR of about 9 to 10%, and it is likely to grow. The projections are showing that all the sectors, the transportations, building constructions, electrical, there is possibility of huge scale growth in these sectors in India specifically. and by 2030, the CAGR growth will be about 7%, 6.5 to 7%, and the consumption of aluminum is likely to rise to about 7.5 to 8 million ton per annum. These are the major business highlights of the company. To reiterate again, we are having the most integrated operation in the aluminum industry, starting from bauxite mines to aluminum refinery, smelting, supported by captive power and our own coal blocks. Then we are a zero debt company, which gives us leverage to fund our expansion projects. We are having raw material securities for caustic soda also. For caustic soda, we are having a JV company with GSL, which is named as GNAM. Then coal, we are having our own captive mines. We are having projects in our refinery site where the refinery expansion of 1 million ton is going on. Then further we have planned to set up a brownfield expansion of smelter, and we are having a global presence in our products. This is our growth plan, a slide showing our growth plans in all areas of our core operations. We are having plans. Currently, in case of bauxite mines, we have already signed the lease deed for Patangi bauxite mine with a capacity of 3.5 million ton per annum, having a reserve of 111 million ton per annum. So, which will give us security of bauxite in the long term. The mines is expected to be opened by this year end. Coming to alumina refinery, the project is progressing well at the moment, and the capacity will be increased by 1 million ton per annum. And we are projecting the mechanical completion to be completed by this year end. And the commercial operation may be likely in the next year. For aluminum smelter, our project has been approved, so the planning process is going on, and the capacity is for 0.5 million ton per annum, and it is expected by the year end of financial year 20. And supporting the aluminum smelter will be the captive power plant with a 1080 megawatt capacity. Apart from our operations and business, we equally put emphasis on our environment commitments. So our mining operations are sustainable. They have been rated as 5-star rating from Ministry of Mines. The key initiatives we take are afforestation, waste utilization, advanced pollution control technologies, water pollution, air pollution. The bauxite mining of Mali, where we are having a 14.6 kilometer long state-of-the-art single-flight multi-car belt conveyor, which is environment friendly, eliminating the road mode of transportation. And also, we are installing a second conveyor of 7.9 kilometer long, which will give our environment management a boost. Then other details are also shown here of the figures related to our environment. Specifically, we are operating 198 megawatt wind power plant, from where we have generated 281 million units in the year 24-25. Further, we are setting up another 15 megawatt wind power in Tamil Nadu. In case of solar also, we are planning to set up 7 megawatt in the coming years. Company believes in the philosophy of growing together with a concern for the society. Wherever our operating units are located, we are putting equal importance on our CSR activities. We have CSR flagship schemes on various sectors like education, health, rural development projects. Some of the flagship schemes are shown here, like the Indradhanush, which sponsors tribal children from Koraput district, from tribal affected Koraput districts in the private sector residential schools. Then we are having NALCO Ladli schemes where we sponsor the child from BPL families to support their education. Then also we operate mobile health unit at our locations in Angul, Damanjodi and Patangi, where more than 1 lakh patients are treated every year. Also we carry multiple social development, rural development projects like roads, drainage, water systems, school infrastructure, and other things. The company has been rated as excellent as per the health assessment as per DP guidelines. We are having 10 board level committees for the ESG governance, 15 policies and guidelines for ESG governance, and we are putting equal importance as per Government of India guidelines to follow our governance guidelines. So thank you all. Now I request.
Thank you. We will now move on to the question and answer session. We have a first question from Mr. Kamlesh Bagmar. Sir, please unmute yourself and yes.
Yeah, sir, thanks for the opportunity and congratulations on very strong set of numbers. So just one question on the part of realization. So what was the realizations for alumina in this quarter, and how do you see going forward in Q1? And if you can give some output on the Q2 as well.
As far as Q1, you are asking about Q1?
Yeah, I am asking about the Q4 and Q1.
Q4 realization of alumina, if we see, it was around that was the NSR which we got around $600, and our cost of production was 22,000 and we were getting around 50,000. Relation was around maybe 25,000 relation was there, contribution. Net sales relation was around $600 in Q4. Now in Q1, the net sales relation which we are getting is around $400. The last spot price was around $400.
Okay, $400. And for the quarter, you would be seeing as an average $400.
Average two spot tenders were at 350 also. So it has slightly improved. We are expecting ki maybe it will be stabilizing around 400.
What is the timeline for our alumina capacity expansion, when it will get commissioned?
Alumina capacity expansion, our earlier timeline which we have committed was September this year, but few of the packages are getting delayed due to some of the local issues and some other unavoidable issues. So we are expecting to finish off all the packages by January or February. After that, the commissioning will start. Commissioning itself takes around 2 to 3 months, 4 months. So commercial production maybe will be starting in May or June 26.
Okay. And lastly, sir, I missed on the figure regarding the cost of production in this quarter for alumina, and how do you see the cost in the Q1?
As far as the cost is concerned, our present alumina cost is hovering around 22,000. We expect the cost will be in the same level. It will further reduce maybe by 1,000 rupees or 2,000 rupees, because this year we are trying to improve our efficiencies by reducing like caustic soda consumption. Caustic soda is contributing around 20% of the total cost of the alumina. So caustic soda, we are targeted around 111 kg per ton of alumina, which was earlier around 120 in the previous years. Even we are doing better than that. So that will give some advantage. Even power cost, if we get some of our internal coal and able to send the internal coal there, that will reduce our power cost. So around 20%, 30% of the cost of the alumina is power cost, including coal and power, everything. That will also, so our target is at least we should reduce the cost by around maybe 1,000 or 1,500, 2,000 rupees.
And for the current quarter, it was 25,000 rupees cost.
For the current quarter, it is around 22, hovering around 22.
Okay. Thanks a lot, sir.
Thank you.
Thank you. We'll take the next question for Mr. Aditya. Please unmute yourself and go ahead.
Yeah, thank you, and congrats for the great set of numbers. So my question is with respect to our fifth stream of alumina refinery. So in the previous call, you indicated that in FY27, we are targeting production of 7 to 8 lakhs tons from that fifth stream of refinery. So is that still holds? And same on the same similar lines, what is the capex, remaining capex on that, and how much of the project is completed as of now?
As far as commercial production is concerned, what our plan is we will start the commercial production by maybe May or June of 26, that is FY27. So we will be targeting more than maybe 5 to 6 lakhs in that next financial year. Capex already we have spent around DPT will tell around 3500.
Yeah, we have completed around 75% of our financial commitment. So it is remaining 25%. So as our CMD is telling, we'll be completing in the first few months of next year, and we'll start the production in the next financial year.
Yeah, understood. That's helpful. And second, sir, any guidance on third-party alumina sales, external sales? Because this figure is slightly volatile on a quarter-on-quarter basis. So for a full year fiscal 26, if you can guide how will be the alumina sales to external market?
As far as sales is concerned, alumina, of course, some few refineries are coming in Indonesia, in China. The refinery capacity is expanding. So external sales, till now we are depending, I think 90-95% of our sale is going to the export market. Now we have to have few of the customers we are thinking of for going for domestic sale also, because our alumina production will increase.
This year also we have increased.
This year we have increased the target for our domestic sales to around 50 to 80,000, which was very less last year.
Yes.
So domestic market we are seeing. Export market, of course, the challenge will be there with increase in the alumina availability in the market.
Understood. Just one last question on the brownfield smelter expansion. So in the earlier call, you indicated that the capex will start flowing from FY27 and total capex figure of 17,000 crore. So does that still hold? And also in the earlier call, the JV with NTPC for the captive power plant was 1200 megawatt, but in the presentation that figure is now 1080 megawatt. So what is I'm missing here?
Capex, you are talking about this smelter expansion?
Yes, 0.5 MTPA smelter expansion.
Smelter expansion, already earlier we had made a DPR for that. Our plan was to go ahead with that DPR, and that was made with Artel technology. But Artel now is not willing to give the technology. So again, we are revisiting it. Our team is going to Dubai. So we have given EIL a target to give DPR in next 6 to 8 months. And after that, we'll be going in for tendering. Our target is next 1.5 years. We finish off the tendering activity. And after that, ordering, everything will, if it completes in next 1.5 years, by end of next year, then actual commissioning and all that will take 3 to 4 years. That is the plan for smelter. As far as power plant is concerned, power plant already we had tied up earlier with NTPC, but MTPC model they are willing, they are planning, or they are insisting on making in 600 into 2 capacity power plant, but our requirement is 270 into 4. That's why we are going in for tendering for appointing the consultant. The consultant will be appointed, and parallelly this will also go along with the smelter.
Yeah, so you are saying that the 17,000 crore earlier capex guidance that you will finalize later on, and that 1200 megawatt is now the need is only 1080.
This 17,000 crore was for smelter expansion, and along with that 12,000 was for CPP. Combined is around 30,000. This capex will start flowing in financial year maybe 26, 27. It will not come. Around 27, 28, the capex will start coming.
Understood. Yeah, thanks a lot, sir. I'll get back in the queue.
Thank you.
Thank you. We'll take the next question from Mr. Digant Haria.
Yeah, hi. Thank you for the opportunity.
So my question is that, around last time we were thinking that the alumina prices will probably settle around $500. But, we've seen very sharp correction in the alumina prices. So, if you can just explain globally what has happened, like, because refineries cannot come overnight. Like we are taking 6 years, 7 years to make the new alumina refinery. The refineries cannot come overnight. And also, if you can explain what has happened on the bauxite supply side, because last year we were all saying that Guinea has probably reached peak production, and bauxite supplies are tight, and which is why alumina prices are high. So if you can just explain the demand supply scenario here on the alumina, that would be great, sir.
Actually, what is happening, the alumina capacities this year, a few of the refineries are getting added up. In Indonesia, one refinery is coming up, it is getting commissioned. India also, Vedanta is adding up their capacity. And the smelter capacities, in China, few of the smelters are closed down. In other areas also, some of the smelters which are not picking up, the smelter capacity is not picking up. That's why the alumina accessibility of the alumina is there. That's why we are seeing that the overall what we were thinking that it will come around $500, it has gone down to around $400. So we are expecting the same will continue. Maybe it will go up to maybe in between $400 to $450. As far as bauxite is concerned, bauxite locally it is available, but bauxite we know globally most of the bauxite is supplied by New Guinea, and sometimes there are disruptions from there, from New Guinea. Few of the disruptions last year were there, due to which the alumina production was affected. But this year, New Guinea again, few days back, they have announced that they will not be supplying bauxite to EGA. Again, EGA is trying to consolidate with them. So globally, that is a challenge because one country is supplying around 60-70% of the bauxite to rest of the world. So any policy decision, policy changes in the New Guinea may affect the bauxite supply to the other alumina refineries across the world. Anything you would like to add up?
Okay. And one thing I would like to add, that the figure what you are telling that last year it had gone to very high prices. That all depends on not only the demand supply scenario, it depends on the geopolitical issues also. You remember a lot of geopolitical issues were faced last year. So this type of spike in the prices do happen, and then these normalizes. Actually, that always happens in a cyclic manner.
All right. Thank you. That's a lot of details. Thank you so much. So my second question is just one clarification. We said that our cost of alumina production was 22,000 rupees a ton, so around $260. Is that number right?
Somewhere around that. It depends on the caustic soda prices and analog prices. Keeps on fluctuating somewhere around that.
Okay. And sir, what would be a similar number for aluminium production, like, based on all the current prices?
Aluminium, if we see our cost of production last year, average was around 160. No, yeah, no? Around 160.
160,000 plus. Okay.
Per ton.
Okay, got it, sir. Sir, and lastly, on this coal mining, this Utkal block, like what is our total coal requirement, and what is a peak that we can mine from the Utkal block, and where are we right now versus that, just that on the coal bit.
Our total coal requirement for our power plant is around 7.2 million ton. Around out of that, our Utkal D capacity is 4 million ton. Last year we had mined around 2.8. This year we'll be reaching 4 million ton. We'll be reaching to the rated capacity of that both Utkal D combined, and rest of the coal which is required around 3.2 million ton, that will be sourced from Coal India through linkage option.
Okay, and sir, just one follow up on this: the Coal India price, the FSA price that we'll get from Coal India and our own mining cost. Like, is there a reasonable savings that we do because we mine our own coal?
Yeah, there is a difference in Coal India prices, which we are getting is around 1900. Must be around 1900, 2000. Linkage coal is around 2000, and our coal is, which we are mining from Utkal D, it is around 15 to 1600. Around 300 to 400 rupees per ton difference is there.
Okay, sir. Thank you so much, sir. All the best.
Thank you.
We'll take the next question from Mr. Amit Lahoti.
Hi, good morning. Thanks for the opportunity and congratulations on a great set of numbers. My first question is on employee cost, which has declined by 12% in FY25. So what are the drivers here? Has the absolute headcount reduced, or is there any other cost saving on employee side that we have achieved?
Absolute head cost has reduced. The retirement was there around 250 separations.
Yes.
430 separations and few inductions we have done. New trainings we have taken, and new trainings we are going to maybe 200 gap was there. That is cost to the reduction in employee cost.
So can we expect that to sustain for this year as well?
Yes. This year also, every year we will be reducing our employee by around 250 numbers per year. That is the retirement which is going to happen, and recruitment will not be doing that much. So accordingly, we'll try to manage with the lean employees.
Okay, and my second question is on refinery delay. So last quarter we were indicating this December 25 completion. Now it has changed to May, June 26. So what has changed in the last 3 months that has led to 6 months of delay?
There has been some delays in the 2 or 3 packages where some local issues were there, the supplies of laborers from the local issues were there, some local resistance were there, because it is a tribal area, Koraput area. Many times many resistances come. We are trying to overcome those issues. Of course, lot of support from district administration and all that is also there. Now everything is picked up, nothing is under stalemate. So we are thinking just maybe because December was the completion time. After that, it takes around 2-3 months for commissioning also. Refinery commissioning also take 2-3 months. Maybe that will get shifted by 2-3 months ahead.
But how confident are we that we will be able to hold the current timeline of, say, May, June 26? Can there still be a further delay, or like we are very confident that, okay, this will definitely come by May, June?
We are very closely monitoring. Every week we are having our own monitoring mechanisms and all that, and all packages we are monitoring at a very close level, and the kind of resource allocation is there in all the packages. In few of the packages the resource allocation was not proper, so now that has increased. Even few packages some issues were there, like rock cutting and all those issues. We have taken the permission from blasting, and blasting has started, which has expired that packages. So we are confident enough that next May, June we'll be able to start the commercial production from there.
Okay, sure. Thank you.
Thank you.
Yes, sir. Can I go ahead with my question?
Yes, sir.
Yes.
We'll take the next question from Mr. Saket Kapoor. Thank you.
Yeah, namaskar, sir, and thank you for this
opportunity.
Sir, firstly, we have this closing capital work in progress closing balance of closer to 4,950 crores. So if you could just provide us input on the closing for the how many projects are these, and this includes the one which is getting delayed by 6 months. So if you could just quantify what amount is attributed towards that refinery expansion that is getting delayed by 6 months. And also, sir, if you could give us an understanding of the tonnages we have done for our alumina for this quarter, and what have been outlined for the ensuing quarter, that is Q1.
I would request my ED, you will explain or आप करेंगे? नहीं, work in progress. ठीक है, आप बता दो.
Regarding this refinery. Yeah, this work in progress of this 1 million ton refinery, which is coming with a better technology and better techno-economic parameters. That is 75% we are progressed, remaining 25%. And once we reach 90%, we'll start closing the things. And as it was told earlier, we'll try to complete the project mechanical completion by February or March, and then we'll start commissioning the project. That takes 3 months time, and from there onwards we'll start the production.
Sir, I was just looking at the balance in investment done. Anyway, sir, that can I can take
balance investment. I had covered it earlier. We have completed 75% of financial commitment. It is along with the project progress. So only 25% of commitment is left, and it is not going to increase our cost of the project. We are completing the project in the approved budget itself. Though time has increased, but budget is not increasing.
And on the
I
tonnage
hope this is clear.
Yes, sir. Thank you, sir. Sir, on the tonnages part, alumina tonnage, we have done for Q4 the entire financial year, and what are we envisaging for Q1?
Tonnage in terms of production, you are telling?
Yes, production and sales, sir. Sales would be more appropriate.
This year we are planning the total yearly tonnage. We are planning alumina is around 22,50,000 tons, and sales we are planning 13 lakhs, no? Sales around 1250.
1230 plus
1230 plus 1275. Sales we are planning 1275.
What was the comparable number for last year, sir?
Last year our alumina production was 20 lakhs, around 45,000. Around 2 lakhs will be increasing alumina production, and similar amount of sales also. 2 lakhs will be the increase.
Was around 11 lakhs.
This
will be going.
Production increment on hydrate would be around 6%. On calcined alumina it will be 10%, and on metal front it will be 3% vis-a-vis achieved last year.
In terms of tonnage, if you see it will be around 2 lakhs.
Yeah.
2 lakhs increase in tonnage in both production and sales.
And my last question is on the investment in the Jinal part. If you could just explain to us with note number 7, exactly we have mentioned about 500 crore investment in the compulsory convertible debenture, and then some other things have also been outlined. So if you could just explain.
Yeah. Jinal was going a very bad path since commissioning date, because combined with multiple factors of high cost, honest borrowing, delay in commissioning, then unusual depressed caustic soda realization, and also negative realization from chlorine, which is one of the major constant for any chloralkali industry for disposal of chlorine. So that has led to cumulative erosion of net worth and profit. So leverages were totally destroyed. That way, both the promoters were not willing to infuse any equity. So the best possible solution that was finalized was the going for a CCD, because that was not going to average the leverage also, and it was giving a breathing time with expectation of more than 90-95% capacity utilization. We will be able to come over, and that was basically infused not only to provide working capital, but to particularly retire the 100 million around ECB that was sitting, which was contributing to a lot of exchange variation loss and erosion also. So that is why the CCD was taken with a backstop arrangement from both the promoters with the 40-60 ratio with a 5-year tenure. That has been subscribed by one of the banker. Then this at the end of 5 year, either or even before that, there can be a accelerated put option or mandatory put option, or there can be the accelerated buyout or mandatory buyout option. Buyout option to be exercised by both the promoters, and put option to be exercised by the investor. So that is the situation. After that, there has been prepayment of ECB loan. Further, Jinal is again negotiating for a soft term loan from GSFC to totally pay out the ECB exposure, whatever 41 million that is remaining as of now.
I'll supplement what TD Finance has told, that the operation of Jinal was supposed to be 90% plus, and with this chlorine offtake some improvement. It has started coming in the operating profit area. If it continues for the 90% plus performance, which it has performed for the last 4-5 months, so this will start coming in the operating profit area.
Okay. Thank you, sir. I have several questions which I'll join the queue again for my follow-up. Hope for an opportunity.
Thank you. We'll take the next question from Mr. Pratim Roy.
Yeah, thank you for the opportunity, sir, and congratulations for the good set of numbers. My first question is, sir, that the aluminum prices for the quarter, if you compare the Q-on-Q improvement, is very marginal, and volume is also there, but our top line for the aluminum segment has jumped significantly. So, can you please tell me what is the reason behind that?
Can you come up again, please?
My question is that aluminum prices for the quarter-on-quarter basis has improved marginally, and our volume is also improved, but overall top line growth is much more than that. So can you please quantify what is the drivers for that huge jump in the aluminum segment revenue?
Alumina.
It is alumina.
Actually, due to
Aluminium, I'm talking about aluminium.
Aluminum prices also has increased because last year, quarter wise, if you see, the LME has gone up to maybe 2600 levels also. Now in this quarter, you are seeing it has gone down to 2350. Now it is around 2450. So LME has gone down in this quarter due to this trade war and restrictions in the duties. That is the main reason where we have a loss in realization in aluminium. And whatever growth is there, growth was in the alumina. Alumina, where we have got the actual growth, and alumina, as far as aluminium is concerned, the growth was on the lesser side.
Okay, sir, and can you please tell me the guideline for FY26 and FY27 capex? How much will you spend on capex side for FY26 and 27?
26-27, our capex target is around 1700 crores.
Each year or for both the years?
For this year, it is 1700. Next year,
next year it will be 2000 crores.
Next year it will be 2000. Okay.
And sir, if you could you please give a guideline of the depreciation side as our project got delayed and it is in FY27. So for FY26, depreciation will be the similar line of FY25 and 27 it will shoot up again. Is that correct understanding?
Depreciation. On the expanded once bauxite Pottangi mines is operationalized and the expanded alumina capacity, once it is operational, definitely there will be increase in depreciation cost for going forward 26-27 when it will be fully commissioned and all the thing will be capitalized. There will be substantial increase in depreciation cost, because earlier depreciation was very negligible being a 40-year-old plant. So there will be increase in depreciation cost, but which is expected to be compensated in terms of savings on manpower, staffing cost, and efficiency in some of the components that goes into production of alumina hydrate. And once our conveyor belt is operationalized for Pottangi mines, then there will be further saving in landed cost of bauxite at alumina also plant. So those will compensate more than the depreciation.
Means FY27 number will be much more significant higher than the 25. 26 will be less slightly.
In terms of depreciation, yes, it is.
Depreciation will be high, but our overall expenditure side, if we see, our operating expenditure will go down, because this is coming up with the latest technology, HRD, DCW, the caustic soda requirement. Caustic soda, which is one of the major requirement of making this alumina raw material, around 20-25% cost is there. That will go down. So for this fifth stream, our overall operating cost will be on the lesser side. So whatever increase in depreciation will be somewhat taken care by this reduction in cost.
Okay, sir. Thank you, sir. Thank you, and best of luck, sir.
Thank you.
Thank you. We'll take the next question from Mr. Tushar Chaudhary.
Yeah, thanks a lot, sir, for the opportunity, and congratulations for a great set of numbers. Sir, what is our captive coal production target for FY26? You said we produced 2.8 million ton in FY25 from Utkal D. And what about Utkal E?
This year we are targeting 4 million ton. So the rated capacity will come.
From both the mines total?
Yeah.
So our
combined Utkal D and E.
Combined Utkal D and E. And 27 will be again 4?
27 will, that is the 4 is the rated capacity.
Correct. Okay. And sir, you said about some conveyor belt. I missed that point. At which mines you were talking about conveyor belts you build?
That is the new Potangi. That is the new Potangi bauxite mine, which will feed to our new refinery. Our AD Finance was talking about that particular.
So secondly, any progress on new projects which we had undertaken earlier at Kabil, Khanij Desh, basically lithium and all?
Kabil, as far as Kabil is concerned, Kabil has acquired the mines in Argentina, and non-invasive exploration job was under progress. That is completed. Now we are going for appointing one consultant there, and after that our invasive exploration will start. The consultant appointment is almost on the verge of final. Our plan is that by the end of 27, 28 we will finish off all the exploration. So by the end of 28 we'll come to know what are the deposits and whether it is commercially viable to mine and economically viable to open the mine there. Maybe somewhere in 28 or end of 28 we'll be able to take the decision whether to go in for commercial mining or that not after the exploration is over.
Understood. And the alloy plant which we had with the JV with Midani?
JV with Midani?
Yeah.
Midani you are asking?
Yes, sir.
Midani JV actually was for making special grade aluminum products, and the kind of forecast which was given in the DPR, the requirement increase, it was given that the increase will come in the transportation sector and railways and construction sector. That is not coming up. So that project overall the investment was around 4,500 to 5,000 crores of investment was there. So that we are not able to justify that project. The IRR is not coming. So still we are not very much sure whether that will go ahead with that project or not. It is under discussion at the ministry stage because that commercial viability is not coming in that.
Okay, sir. Thanks a lot. Thanks for my question.
Thank you. We'll take the next question from Somaya V.
Thanks for the opportunity, sir. Hope I'm audible. So the first question is on the global aluminium landscape. So you've mentioned potential restart of some smelters in US and Europe, and also you have given expectations in terms of this year's global aluminium production going up by 1 million tons. If you could give some color on.
There's a lot of disturbance. Somaya, can you please speak closer to the mic?
Yeah, am I audible now? Is it
yes,
better?
It's better now.
Yeah, thanks. So the question is on the global aluminium smelter additions this year, the restarts that you mentioned in the presentation. So could you just help us on what is the incremental capacity that you're seeing in this year in the global landscape?
Same level में रहेगा fully.
Incremental capacity, some of the closed smelters which were not operating, that will come up. New smelters, some of them will come because this year you see on an average the global aluminum production is around 72 million ton. So that will be maybe 73 or 74 next year it is targeting. Next year the projections are it will be around 73 million ton.
So this is in reference to some of the European smelters that went offline maybe a couple of years back and they are coming back now. That's the one that you're referring to?
They are coming back, but in China also some of the smelter due to this carbon emission and reduction in carbon emission, they are stopping those smelter, modernizing it to reducing the carbon emission. All that to China, some of the production may go down, Overall, the production increase will not be much.
Okay, got it, sir. Sir, also in the last week, there was a news on Guinea revoking some mining licenses. Any thoughts on any impact for bauxite supply globally?
News you are talking about New Guinea, na?
Yeah.
Egypt.
Yeah, supply to Egypt.
So,
Of course, the
no,
news.
apart from that, I mean, this is, I mean, not only EGA. I think there was one news about talking about, revoking some 40 by 50 mining licenses there.
Any news you have?
In fact, I think that what you are referring to is the mine owned by EGA itself, by the GSE, Global Aluminium Alumina Corporation, Emirates Global. So that is the mine on which will be mostly affecting EGA's own sourcing. Otherwise, China bauxite import from Ghana has in fact gone up. Now it is 25 to 30% in last quarter. So other global supply of bauxite has not been affected.
Got it, sir. Sir, also on the alumina, you gave your quarterly last quarter realizations, and then what is currently what is going on. So similarly for aluminium, would you be able to give the realization last quarter Q3 and what you're seeing currently?
You see, aluminium in the last quarter of previous year, it has reached to even 2600 levels. Now it has gone to this quarter to around 2400, 2350 to 2400 levels. But the projections are there in H2. It will further improve and it will go to more than 2500, maybe 25 or 2550. That are the projections which are coming up.
Sir, I was looking out for more in terms of your realization, sir. Like alumina, you had given $600 Q4, and currently around 400 is what you're seeing. So similarly in aluminium, just want to understand if the Asian premiums have helped a bit in the realizations.
Our realization is also linked directly to the LME. Whatever LME prices are there, our realizations are directly linked to it.
Can I answer? Yeah, above LME also this way in our pricing mechanism we capture the Asian premium. So definitely that was also added. Apart from what LME, in fact, last 2 quarters we didn't have any export. You might be knowing that. So in domestic realization, the exchange rate, the Asian premium, all those are captured. So you have to estimate accordingly. Above LME, the domestic metal realization was more than 2.5.
Got it, sir. In general, Q4 had a good support from Asian premiums, sir, compared to Q3.
No, I think what the quarters in 2025, 24-25, the Asian premium had come down towards the end of last quarter. Earlier it was more than 100, then it came down.
Got it. So one small clarification, when you gave the cost of production, I presume that includes the depreciation cost also. If you could just give X depreciation, that would be helpful both in alumina and aluminium. So when we said 22,000.
In the present cost, the depreciation is not there. Depreciation is almost negligible because the plant is already very old. So in the present, whatever cost of alumina or aluminium we are telling, the depreciation is almost negligible. कितना है?
Now it is 1188.
कितना है? बता दीजिए.
It is around 1000 now in alumina because of the whatever capital investment that goes into high equipment and other investments in mining equipment. But going forward, this is going to be almost near about to little less than that, double, if we are coming up with the refinery and our bauxite mines. For metal, the depreciation component is around 5% of the cost of production.
So of 1,60,000, 5% is something.
Yes.
Got it, sir. Thank you, sir. Helpful.
Thank you. We'll take the next question from Mr. Akhilesh Kumar.
Yeah, thanks for the opportunity, sir. So my first question is on the captive coal mining. So what is the current run rate of production from Utkal D and E? And also, as your guiding cost difference of rupees 400 per ton from coal linkages, would it be fair to assume that cost savings would be higher given our captive coal will replace e-auction offtake instead of linkage one?
तो ये coal production कितना करें? Our director production will reply to you. चलिए.
This year we will be producing around 40 lakh ton, 4 million ton. This year we have planned from Utkal D and D.
And sir, on the cost difference guidance, would it be fair to assume that it will be more than 400 as it will be replacing e-auction?
The difference between e-auction price and our price, e-auction or maybe linkage price, if you say linkage price of coal from Coal India and our price is around 300 to 400 rupees per ton. Our price is around 15 to 16.
On that only, so, since captive coal will be, I assume, will be replacing the e-auction instead of the linkage one. So the difference with e-auction and the captive coal price would be higher. So would it be fair to assume that it could go more than 400 per ton?
Actually, e-auction prices are very variable. Now, earlier it was on the higher side. Now it has gone down to around 1900 or 2000 also. Na?
Same 2200.
2200.
Close to.
So it was coming close to the linkage coal. Only sometimes depends on the mines from where they are giving it. But if you see the difference in between e-auction and our coal difference, then it will be slightly maybe 500, 600 rupees difference. And linkage and our coal is maybe 300, 400 rupees difference.
Right. Okay. Thank you, sir. And my second question is on the smelter project. So, what are the economics there? How much IRR and ROC we are assessing, and at what price assumption what we are taking into for aluminum while building those IRRs?
The proposal which our board had approved for 17,000 crore rupees of investment in smelter and power plant would cost another 10,000 crore. That time this IRR was taken. So now we are coming up with the detailed project report, the fresh detailed project report for smelter as well as power plant. And after that we'll be coming out with what will be the IRR and what will be the return of capital.
Sure, sir. Thank you so much.
Thank you. We'll take the next question from Mr. Sumangal Nivashya. Please go ahead.
Yeah, thank you, sir, for the chance. So first question is on the coal block. In between, we were talking about applying for higher EC, maybe from 4 to 5.5 or something. Is that plan still on, or we should expect this 4 million ton only to continue?
See, you are asked a very right question that we can increase 20% without even taking EC also. But if you want to increase it beyond 20%, for that environmental clearances and other clearances has to be taken. But for this year, we are sticking to 4 million ton. And as we progress this year, because this coal is new to our power plant, and we are mixing it up 50% with the MCL coal. So we will take the performance and then we'll decide upon. We have the liberty of going up to 6 million ton in coming financial year. That decision will be taking after 6 months.
Understood, sir. Very clear. Sir, today, what would be our employee count? Around 4,600?
4,800.
Okay. And understood. And sir, the net reduction over next 2-3 years, what are we looking at?
Almost 250 per year.
Per year. So we will go down to as low as 4,000 employees, right?
Yes. We will take something also. Some inductions will be there, not at that rate, but induction, of course, the remuneration at the induction stage will be on the lesser side. Whoever employees are retiring, their very high remunerations are there.
Understood. So this year our employee cost went down by almost 200 crores. What is the guidance for 26 and 27? Is the reduction will continue, or we should see it stabilizing at around 1800 odd crores?
The employee cost movement either downward or being static has been composition of two factors basically: superannuation at a higher level and induction at lower level, and the company's performance and profit, which leads to a component of the pay being given to employee. So with a higher profit this year, definitely that component is quite substantially high, which is not likely to be sustained in next year, as you all know, because of the declining alumina price, and even if our production volume goes up, so profit will not be to that extent. To that extent, payout to employee will also get reduced. So it will be very premature to talk of figures now. But on the employee cost, per hour cost side, fixed and other salary component will come down. But then again, it depends on the financial performance and the payout.
Understood, sir. And sir, this year's 1800 crores, it already includes the incentives of good profitability in FY25, or it is included in 26?
Yes, it is included already. It is accounted.
FY25 that is accounted for.
Understood. Sir, this year overall our sales of alumina and captive usage was still lower than production. So did we have any increase in alumina inventory?
The alumina sale will always be lesser than the alumina production, because almost half of it, slightly less than the half, goes to the smelter for aluminum production. So out of the total production, almost 10 lakh ton goes to the smelter.
Sure, sir. Of course. So if you use say 1.9 multiplier, then also there was appearing some gap. So I just wanted to know if we are.
We have increased our inventory at the smelter. 3 months back, our inventory at the smelter was around maybe 10,000, 12,000. As of date, at the smelter level, our inventory is around 60,000, 65,000 tons.
Okay, understood. That
So
explains.
for better operation, and to take care of the any risk, we are keeping some higher stock of alumina in smelter, because frequent logistics issues are there because of the railway movement and all. We are totally dependent on railway. So that is a decision taken by the company to have safety stock.
Understood. So my next question is on aluminium cost. So this year there's been a good reduction. Were there other elements except from the captive coal and employee cost contributing to this reduction in FY25?
CP coke, the cost of CP coke has gone down. The CP coke cost reduction itself has contributed around, I think 450 to 500 crores saving. That was one of the major saving as far as raw material is concerned, CP coke. And caustic soda, of course, that was in the alumina side. Caustic soda has also given us around 150 crores, and CT pitch cost has gone down slightly. That has given around maybe around 70-80 crores. And efficiencies also some what increase in the efficiency, that is reduction in the caustic soda and CP coke, that has given around maybe 100 crores.
Okay, so in 26, are we seeing any reversal of any of these carbon related costs as of now?
Already.
Yeah, in FY26 there is already a reversal both in CP coke and the caustic soda price. Also there was a slight reversal, but again in last maybe 8-10 days it has again started coming down. It had gone up, but a few days back it has started. But since our ordering is for a 6-month cycle, so we don't get every month or every now and then moment benefit or cost. But there is already little bit of reversal in CP coke and caustic soda price.
Actually, the thing is that the raw material prices depends on the raw material cost to the suppliers. It is very difficult to predict whether the prices will go up, how much it will go up or go down. But what our ED Finance was telling, it is the momentarily figures. But actually, it is very difficult to assess what exactly will happen. But we are hopeful that the prices will be competitive.
Understood. And so just one last question on the capex on 1700 crores. Is it possible to give a broad breakup of how much is maintenance, how much is towards refinery, and maybe for future smelter, how much are we accounting?
1700 का breakup बता दीजिए. Refinery का कितना? Refinery का around कितना है बता?
This 1700 crore, 1100 crore would go for 15 refinery and Putangi bauxite mine and other major projects. And rest of all will be modification, EMR project, addition, modification and repair projects in both the complexes.
Understood. Understood. All right, sir. Thank you so much. And I hope this call initiative continues every quarter. Thank you for this call. Thanks.
Thank you. Thank you.
We have a follow-up question from Mr. Kamlesh Bagmar. And there's no response from the participant. Saket Kapoor.
Yes, sir. Thank you, sir, for giving this opportunity. And as Sumangalji has mentioned, we would looking forward for continuity of these calls. These are very exhaustive and informative. Sir, when we look at our the depreciation line item, there is some reversal also of 76 crore for the quarter. So if you could just explain to us how that has worked out. And my second question is, if you could give us the realization for, hello?
Yes, yes. Yes. Boliye.
Secondly, sir, what was our alumina average realization for the year as a whole?
As far as alumina average realization for the year 24-25 was around $590 for the year 24-25. And as far as depreciation is concerned, the reversal of depreciation, I would request ED Finance आपको है क्या? Just find out what is that.
Your depreciation reversal, you are talking Q1Q or preceding quarter?
Q1Q, sir. December quarter versus the March quarter.
Q3 versus Q4.
Yeah, Q3 versus
different depreciation reversal है क्या?
And sir, lastly, sir, you mentioned about the alumina prices now trending between $350 to $400. Are the tonnages in line with our quarterly run rate, or are we seeing any dip in the shipment also? Q1Q means for quarter 4 the shipment and quarter 1 the shipments are in aligned.
Can I come in?
Yeah. Shipments are distributed across the year. We'll be selling around 12,75,000 tons in the current year. Out of that, we'll be exporting around 12,30,000 tons. And shipments, we have already planned month-wise shipment for the whole year.
Okay.
Depreciation Q4 over Q3 reversal is mainly due to a change in the estimate for threshold limit for capitalization of major spare. Earlier it was a very low amount which we have increased to a little higher amount. Then second was a reassessment of the our lean slurry project, mines void of MCL, where our ash disposal takes place. That assessment is taken every year end. So the latest assessment has increased the void to be filled by almost double. It was earlier assessed at 2.2 years, now 2.3 years, now it is 5 years. So that has also contributed to reversal of depreciation. Then there was an impairment earlier in Q3 of wind power assets, which has been going on for last few quarters. Now this fourth quarter, we have taken a fair valuation of our wind power assets. Based on that, there was a reversal of impairment provision. So that all the three components have led to depreciation reversal.
Yeah, thank you for all the elaborate answer. Only one thing was left was about the finance cost also, sir. We are seeing this line item also cropping up Q on Q, 19 crore se 32 hua, and for the year it is around 59 crore. So what have led, although we are net cash company, but since the finance cost line item have now started surging up, it was around 59 crore for the entire year.
This is nothing but there is nothing cash outflow. It is nothing but accounting treatment only. Now the CCD issuance what we talked a few minutes earlier. So that is a component of backstopping arrangement. And under accounting standard, it has to be treated as a guarantee. For that, a financial obligation has to be created, and that will be unwinded towards the end of the 5th year. So to that extent, it has gone 4 crores. Then there is a mine closure obligation of Utkal E block, which is now also has come been operationalized. So to that extent also it has increased. So all those things are only either these are notional cost. There is no interest outflow, nothing. Unwinding of interest on obligation towards backstopping support of GNL and issuance of compulsory debenture, then unwinding interest on mine closure obligation. These are the things.
Thank you, sir, and all the best to the team, sir. Thank you. Thank you, sir.
Thank you. So, sir, can we take one last question from Mr. Aditya? He has his hand raised.
Yes.
Aditya, please go ahead.
Yeah, just one last question, sir. So on the starting up timeline for Potangi bauxite mine, so in the last call you said by December 25. So does it hold, or you will extend it because of the delay in the smelter, delay in the refinery? Sorry.
Potangi bauxite mine starting we have planned by June of 26. That is the timeline given to us, and already we have planned, and by June of 26 we will be doing it. Because smelter is also getting delayed, so our requirement is not there. So by June of 26, we will start the mines.
Understood.
Potangi mines has got all the clearances. It has got all the statutory clearances now, and we are working on it to start it.
Understood. Just on a full year fiscal 25, what was our coal sourcing mix? How much was linkage, e-auction, and captive?
Our coal requirement is around 7.2 million ton. Out of that, this year our plan is 4 million ton will be captive, and rest will be from linkage.
Okay. Thanks a lot.
Mr. Kamlesh, I think in your earlier first session you asked about this e-auction coal. That is only 5 to 6% of our coal source.
Very less quantity.
Okay,
E-auction already.
And figure I want to stand corrected. It is not 2,200. It is 2,350 to 2,400. The last e-auction price we realized in towards November. After that, there has been no increase because we are participating in e-auction for our SPP in refinery also. It is at a reserve price only we are getting. So e-auction, because of excessive coal production or adequate coal production in the country, there is no pressure on e-auction coal price.
Thanks a lot for all the elaborate answers.
Thank you.
Thank you. We'll take that as the last question. I hand over to the management for their closing remarks. Thank you so much.
First of all, let me congratulate the collective, all our shareholders, stakeholders for having a confidence in us, and on behalf of NALCO management, I would like to assure that whatever growth we have achieved in this year, almost 46% growth in EBITDA, 46% EBITDA margin was there. Of course, that was triggered off due to high alumina price and high aluminum prices. But we are taking a lot of measures. Like this year, we have planned for increase in alumina production, increasing our efficiencies, reducing our cost. So this year also, whatever plan we have made, physical performances and financial, we will be targeting around maybe 36 to 37% of EBITDA margin. And whatever revenue generations we had this year, almost we'll try to achieve the similar kind of revenue generations, and profitability, of course, may vary depending on the prices of alumina and prices of aluminium. But our own internal control, that is increasing volumes, increasing efficiencies, that is increasing technos, and reducing the cost. We are working hard on it to improve the performance of the company and give maximum benefit to our shareholders. Thank you.
Thank you so much.
Thank you.
Yeah.
Thank you very much.
Ma'am, with this, we come to end to this conference call.
Yes, sir.
Okay, thank you.